Okay. Can you guys hear me on your side?
Yes.
Okay, thank you.
Yeah, I would.
Okay, perfect. So here, these are the notes that I will email them to you guys so that you can have them. I think this is just the basic information that I want you to understand. It's basic information that I want you to go through it and understand. You must print this thing, and then you have it with you. Before you do the cash flow statement, you have to read everything that is here, understand what is here. These are the notes that are very important for us to go through. But before I do that, I want to ask from you. I will start with you, Kinelwe. What do you understand about the cash flow statement? What comes to your mind when we're talking about the cash flow statement? What is the cash flow statement according to your understanding?
We do the cash flow statement to see what amounts of cash we have as a business.
Okay, that's correct. Very good. That's correct. We want to know how much cash we actually have. Yes, but that's not really the main point. Even though, like, although cash flow, yes, help us in terms of knowing how much is the actual cash that we have as a business. But we do have a bank statement that will show us the bank balance. We do have we do have a bank statement. It tells us how much cash we have. But cash flow statement as well, it does give us a balance of cash that we have at the end of the year. Smang, on your side, what do you know about cash flow? Have you done cash flow in grade 11? Or have you done anything about cash flow so far?
No, we're gonna start like next week. Yeah, that's a time next week. This week
Okay.
is send my ledger accounts. Oh,
Okay, no problem. No problem. Um, I want you guys to listen to me carefully. Yeah? I want you to like to pay attention to what I'm going to tell you today. I want you to focus. Please try to avoid everything that is going to distract you now so that you can get to understand what is cash flow, why we're doing cash flow statement, why is it important. I will touch on few things that are here on these notes, but I want you to go through everything that is here because I wrote these notes because I know they're important. I want you to go through them. Everything. There's 4 pages here that I want you to go through. But from what you told me, Kinelwe, yes, cash flow does help us in terms of understanding or maybe in terms of knowing how much cash we have at the end of the year. But more importantly, it helps us in terms of understanding how cash move in our business. How do we generate cash? What are the sections of our business that help us in generating more cash? And what are the sections of our business where we spend more cash? Because when you're running a business, it's either you generate cash, you're doing two things. You generate money and then you spend money. During that process, you need to understand, where am I spending more money in terms of the actual cash movement? We're looking at the actual cash movement. We want to understand, how does the business generate cash? How does it spend that cash? Then we are able to make decisions from there. We are able to identify all those sections where we feel that we're spending more cash unnecessarily on these things. Then we can cut those expenditure. That is the reason why we're doing cash flows, because we want to track the cash movement of the business. It's very important that a business generates cash on a daily basis because we need cash to operate. A business that does not make cash, I don't think that business will be successful. A business has to generate cash every day there must be cash movement in a business. If you're running a business, but you're not generating cash, that business will not be successful. So it's very important for us to prepare the statement of cash flow or cash flow statement to understand how is the business generating money, from which aspects are helping us in terms of generating money in our business, and how do we spend that cash. We've done income statement so far. We've done income statement. From that income statement, the main purpose of doing income statement is to understand the profit, right? Profit or loss is to calculate a profit or loss of the business, right? We can get a profit of 1 million from income statement. We can get a profit of 1 million rands from income statement. But it is possible that we can make a profit of 1 million, but you find out that in our bank account, we have no money, we have zero bank balance, but you made a profit of 1 million from your income statement. It is possible. You made a 1 million rands profit, you generated a profit of 1 million rands during the year, but how much do you have in your bank account? Nothing. In that sense, income statement does not help us in terms of knowing how much cash we have in our business. It doesn't help us because we're using accrual basis. Accrual basis, when we're doing income statement, we record expenditure even if we didn't spend money, but you incurred an expenditure. You record income even if you didn't receive cash, but you earned that income, you record it in your income statement. So income statement does help us in terms of knowing how much profit we made during the year, but in terms of how much cash we received and how much cash we spent, we don't know about that. And we cannot get that information from the income statement. By saying that, I'm not saying income statement is not important. It is a very important financial statement. One of the financial statements that we have. One of the key financial statements that we have, which is income statement, balance sheet, and the cash flow statements. Those are three very important financial statements that we prepare each and every year. Income statement is one of them. It is very important for us as a business to prepare the income statement, but it doesn't help us in terms of other, in certain areas, like identifying how much cash we spent, how much cash we generated during the year. Balance sheet. It helps us in terms of identifying what? The net worth of the business, right? Net worth of the business. Again, here, you may have a net worth of 5 million. It's possible that you have a net worth of 5 million rands net worth. But is this cash? Can we say that I have my cash of 5 million? No. It's possible that you may have not cash. This one, net worth is not cash. Profit is not cash. You see, if the business have a net worth of 5 million, that business is rich. It's very rich, that business, because I have a net worth of 5 million, but you may find out that I have nothing in my bank account. Net worth is not an actual cash. Profit is not an actual cash. That's why it is important that we need to prepare what? The cash flow statement. Cash flow statement. That is going to help us in terms of understanding how much cash we're making, how much cash we're spending, and then we can see that I will be able to pay my creditors. How much cash do I have? because my balance sheet will tell me how much creditors I have. But for me to know whether I will be able to pay them or not, I need cash flow statement. So all these statements, they are very important for the business. We need them for us to run a successful business. Now let's go to these notes and see what they say here. Introduction. The main purpose of the income statement is to what? Determine the net profit, which is true. The main purpose of the income statement is to determine the net profit of a business, while the balance sheet is to determine the net worth of the business. You can see now the purpose of these two statements. The other one is focusing on the net profit, and then the other one is focusing on the net worth. Right? It's very important to know the net profit of the business. It is important to know the net worth of the business. However, we still have other information that we need to understand about our business that we're running. Besides obtaining such important information, certain questions in respect of performance of the business must still be asked, right? It raises some other question that we might have when we're running a business. We cannot be satisfied by seeing the profit, by seeing the net worth of the business, that we have a positive net worth, we have a profit, we made a profit. That is good for the business, but it may not be enough when we're analyzing the financial statements. Because for me, what is important, I want to see that the business is generating cash, the business has money. Because remember, in the income statement, you're recording sales there. Even if those sales are on credit, even if it's credit sales, you record them. Even if it's credit sales, you record them as sales. But it's possible that you might not receive this money at the end of the day. But what about your stock? If the stock left your business and it went to customers, you gave them your stock on credit, which creates credit sales. But now, is it guaranteed that you're going to receive all this money? No. That's why we have bad debt. So it's very dangerous to say you only have credit sales in your business. It can help the business in terms of making more sales, but there's a high risk there of not collecting all those monies from your debtors. But we might end up losing, because bad debt is not just bad debt for the sake of saying this is a bad debt. That is a stock that we gave to the customer, and the customer did not pay us, and then we're losing. You see, now let's go and see the importance of the cash flow. This will include some of the following. Let's check the questions that we're talking about here. We said here, besides obtaining such important information, certain questions in respect of the performance of the business must still be asked. So which means now the income statement and the balance sheet does not give us the full information that we need about the business. There are certain questions that we may still ask in terms of the performance of the business. Which are those questions? Let's look at them. How much of cash was generated by the business over the past year? Income statement cannot give us this information. The balance sheet cannot give us the information of how much cash was generated by the business over the past financial year. You will not get that information from the income statement. You will not get that information from the balance sheet. So which means now you understand now that although these two financial statements, they are important, but they do have some limitations. They do have those things that they cannot assist us with in terms of decision making, in terms of understanding the operations of the business. Second question, if any cash was generated, where was it generated from? While a business may boast cash totaling 1.5 million being generated, such information becomes questionable if it is found that this money was borrowed during the financial year by the business. It's possible that we generated a cash of 1.5 million, but where is it coming from? It comes from the loan. We borrowed money because the business is a business because we want to sell and get money, right? If it's either you're selling or you're rendering a service. And then that's how you generate cash. But a business that generates cash by borrowing money, that's not a good business. That's not a good business, because the balance sheet can tell us that we have cash. Remember in the balance sheet, that we have cash and cash equivalents there. We have cash and cash equivalents. Cash and cash equivalents, it can be maybe 2 million. I'm making an example. It can be 2 million cash and cash equivalents, or 20 million, as you can see here. But where is this cash coming from? We cannot tell. Where is the cash coming? It's possible that this cash comes from the loan. We borrowed money and we have money in our bank account because we borrowed it. Where is money that comes from our operations? Where is money that comes from sales? Because I need to make some cash sales so that I get money from the customer. That is the cash we need as the business, right? This is the cash we need that comes from the cash sales, because no one starts the business aiming to borrow money only. No. Everyone who starts a business is aiming to generate cash by selling or rendering a service. So it's very important that the business prioritize cash sales instead of like borrowing money or trying to find other ways of generating cash. There is another question. Number 3, how much of cash is being generated by the daily running of the business? You see now, the primary activities of the business is to sell and make money. How much of that money is made by the business through selling? How much is that? You see why the business needs to make money through daily operations. How was the cash generated by the business used? That's another very important question. We can talk about generating cash, yes, but how was that cash used? From the cash flow statement, we can be able to see that, okay, fine, we generated 5 million from our operations, but how did we use the cash? Where did we spend it? Maybe we purchased some fixed assets. It's possible that we're going to buy some tangible assets. We're going to invest some other money. It's possible we're going to buy back shares. That's how we spend money as a business. We're going to buy trading stock. The cash flow statement is going to tell us how was the cash generated by the business used. All that information, these are the questions that you cannot answer using what? Using the income statement. All these questions that you can see here, you cannot answer these questions using the income statement. You cannot answer these questions using the balance sheet. That's why you need a cash flow statement for you to be able to answer these questions. How much of cash was generated by the business over the past financial year? I can go to the income statement and give you the cash that was generated by the business. So guys, when your teacher is asking you why cash flow is important, what is the purpose of cash flow, you can change these questions and tell your teacher the purpose of the cash flow, how much cash was generated by the business over the past financial year, which means cash flow help us in terms of identifying how much cash was generated by the business. That is the first thing. It tells us where the cash was generated from. Where was it generated from? That's the cash flow statement. It tells you how much cash is being generated by the daily running of the business. That is the cash flow statement. It tells you how did we use the cash that we generated. That is the cash flow statement. That's why you can see now how important the cash flow is. Very, very important. Okay, let's get on here, guys. Since the income statement and the balance sheet does not provide such important information, you can see now, since the income statement and the balance sheet does not provide such important information, there is need for a statement to provide us with such useful information. There is a need for a statement that will provide us with such useful information. Hence, there is a need for us to prepare the cash flow statement as part of our financial statements at the end of the financial year. It's very, very important that we prepare the cash flow statement, because income statement and the balance sheet cannot help us with some other information. So now you understand the reason, guys. Here you're gonna make your notes from this paragraph. You're gonna make your note why cash flow is important. How does it help us? By now, you must know, how does the cash flow statement help us as a business? Because there is certain information that we cannot get from the income statement. There is certain information that we cannot get from the balance sheets. Therefore, it's very important for the business to prepare the cash flow statement at the end of the year, so that we can be able to understand certain information regarding the business. Consider the following transactions containing two different businesses transacting with identical laptops. Business A, let's see, they bought a laptop for 6,000 and sold it for 10,000. You can see this business, they bought a laptop for 6,000, which means, and then they sold it for 10,000. So that is sales minus cost of sales. There's a profit of 4,000 here. Business B, they bought a laptop for 6,000 and they sold it for 7,500. Which means business B is going to make less profits because they sold it at a lesser price. But let's see here what they're saying. Which business has been concluded? Which business has concluded a better deal with the laptop? Obviously, you're going to say business A because they're going to make more profit. They sold it for 10,000. Which means they're going to make more profit, business A, more profits than business B. They say here, business A made a profit of 4,000, while business B made a profit of 1,500. You can see a better deal is business A, obviously. In terms of the income statement, look here what they're saying. One's decision on a better deal will be determined by the higher profits, which is true. But if you told that business A concluded the transaction on credit, while business B sold the laptop for cash, the decision of a better deal may change, as it is possible that business A may not recover the cash for the sale of their laptop. Although business A will make more profit, but what if they sold this on credit, which means now business B is the one who's in a better position. Business B is in a better position because selling something on credit, it is good to increase your sales, but it has a high risk. It has a high risk because these 10,000, you might not receive it at all, and then you make a loss. You make a loss. So it's very risky to do credit sales. It's very risky to have credit sales. It's very, very risky. So now we're getting to go deeper in terms of understanding the purpose of cash flow. You can see, guys, we have not done anything in terms of calculations, but we're trying to understand the importance of cash flows, the purpose of cash flow, because you know why balance sheet is important. You know why is the income statement important, but you also need to understand why cash flow is important. Okay, any questions so far? Kinela, still okay?
Yes.
How about you, Smanga?
Yeah, I'm still good.
Okay, perfect. Let's get on here, guys. The purpose of cash flow statement. Why are we preparing the cash flow statement? Already we know because we have touched on these questions. These questions, they give you the purpose. These questions, because they tell you why you're preparing cash flow statement, because you want to know how much cash was generated by the business, where was the cash generated from, how much of that cash is generated by the daily running of the business, how was the cash generated by the business used. It gives you like the purpose, because you want to know all of that information. But let's see what they're saying here. The purpose of cash flow statement is to provide users of financial statements with information on the inflow of cash and the outflow of cash in a business over the past financial year, right? It gives us the information about the inflow of cash. How much cash did we generate and receive during the year? How much cash did we spend during the year? The cash flow statement reports on the flow of cash in the following forms, right? The main purpose or the main reason for us to prepare the cash flow statement is to understand the cash movement, which is the cash inflow and the cash outflow, and then also understand the following. Let's see these operating activities. We have investing activities here, and then we have the financing activities. I want us to look at these three, because cash flow statement is divided into three main activities that we have in our business. Operating activities, we need to understand what is operating activities, what kind of cash that will be generated from operating activities. Cash flow from operating activities, we need to understand. Those are the three activities that we're going to have in the cash flow statement. You will see, even when you start preparing the cash flow, we're going to have what? Cash flow from operating activities, cash flow from investing activities, and the cash flow from financing activities. And then at the end, I'm going this is the format of the cash flow statement. I'm going to have net change in cash and cash equivalents, right? Net change in cash and cash equivalents that I'm going to have here. And then here I'm going to have what? Cash and cash equivalent at the beginning of the year, because I need to know how much money I have. Cash and cash equivalents at the beginning of the year. And then I need to have what? Cash and cash equivalent at the end of the year. Okay. At the end of the year. So this is my cash flow statement in total. This is hello guys, I hope you can hear me. I'm sorry, I think my network gave me a little bit of a glitch. I'm sorry about that. Okay, let's see what is operating activities from our format. They're saying here, this activity deals with the cash flows from everyday transactions of the business. It is expected to contribute the greatest to the improvement of cash flow of the business for the financial year concerned, right? Cash flow operating activities, these are the activities that we believe they need to generate more cash than investing, more cash than financing. Because operating activities, that's where we have our daily operations. If I'm selling, trading stock, I'm making money on a daily basis from selling. So operating activities, because of that, they have to generate more cash for the business. I'm buying and selling here under operating activities. More information will come from the income statement and also some part of the balance sheet, because we're talking about what? Daily operations, everyday transactions. So those everyday transactions will give us operating activities. The cash that will be generated from the everyday transactions of the business, they will fall under operating activities. Okay, investing, if I can make an example, we're selling every day, right? Which means the cash that will be generated from sales will be sitting in operating activities. You will see when we deal with the format, it comes with, there's note there of cash generated from operations. Sales will be there, expenditure of the business will be there. Because we start with the net profit before tax, which means income and expenses will be sitting in the, that income and expenses will be sitting in operating activities. And then within that note, we have net change in working capital, where we're going to have current assets and current liabilities there. Trading stock, we have trade and other receivables, we have trade and other payables. They are form parts of operating activities. Now, coming to the investing activities. This activity deals with the acquisition of fixed or tangible assets, proceeds from disposal of fixed or tangible assets, and changes in the investment, which is fixed deposit of the business. You can see now, this one focuses more on the non-current assets of the business, because we invest through the non-current assets. It's either we buy the fixed asset or we invest cash into the bank. That is our investing activity. So which means now our balance sheet will help us in terms of identifying the investing activities, because we need to know how much assets we purchased. Remember, when we're buying a vehicle, those additions and costs that you usually see from your fixed asset note, they will come here as what? As purchase of fixed assets. So which means now from our cash flow from investing activities, I'm going to have what? I'm going to have what? Purchase of fixed assets here. Purchase of fixed assets. So which means now if I'm buying assets, if I'm buying vehicles, I'm buying equipment, that cash will come here as what? As a purchase of fixed assets. But also if I'm selling some fixed asset, because remember, it's possible that you can sell equipment, it's possible that you can sell vehicles and all of that. You can sell vehicles, you can sell equipment. That is going to be what? Proceeds from sale of fixed assets. Where are you going to get this information? This information, you're going to get it from the fixed asset note, because that's where you dispose, that's where you buy. But also, you're going to have what? When you're making an investment, there's something called investment placed, right? Investment placed. Here we're talking about a fixed deposit. We're talking about what? Fixed deposit that was made during the year. And then we can also have what? Investment matures, right? Investment matured. So also here we're talking about what? A fixed deposit as well. So which means you can see here we're dealing with the non-current assets more. Then when it comes to financing activities, they're saying here, this activity includes the additional cash that the company collected through the sale of additional shares and increase in the loans of the company. You can see now we're generating cash under financing activities. We're generating cash by doing what? By selling shares. And then increase the loans of the company by borrowing cash. Cash can also be utilized for the repurchase of shares by the company and in the repayment of loans. You can see here, cash inflows, it's either we sell shares or we borrow money. Cash outflows, we buy back shares, we pay the loan. These are we're going to have what? The financing activities. So our financing activities will consist of what? Proceeds from issue of shares. There's something called proceeds from issue of shares. So which means now if I'm issuing shares and I receive cash from those shares that I'm issuing, they're going to give me what? Cash, which will be called profits from issue of shares. That will be sitting in my cash flow statement. Right? And then while I'm issuing shares, I can also buy back those shares. Then I'm going to have what? Cash paid for what? Cash paid for share buyback. Cash paid for share buyback. Cash paid for share buybacks. So that's something that would be an outflow, because here I'm going to have inflow, obviously, and then I'm going to have outflow when I'm paying cash. Purchase of fixed asset, that is going to be an outflow. Proceeds from sale of fixed asset, that is going to be an inflow. Investment placed, that is going to be an outflow, right? Investment matured, that is going to be an inflow of cash. Then another financing activities, we're going to have proceeds from long-term loan, right? Which means what are proceeds from long-term loan? That is cash that we received from borrowing. To borrow money, that is a long-term loan. Proceeds from long-term loan is going to be an inflow. That is going to be an inflow. Okay, the last one, then it's going to be the repayment of long-term loan. So which is going to be, and this one will be an outflow. Okay, I hope you guys are still following. I hope you guys are still following. I hope you are still following. That is going to be my financing activities and these three activities that I'm going to have. Information from the completed income statement and balance sheet is used to prepare the cash flow statement as follows. You see, for you to prepare the cash flow statement, what do you need? You need the completed income statement and the balance sheet, which means now, without income statement and without balance sheet, you cannot prepare the cash flow statement. You can see now how important income statement it is it? How important the balance sheet as well. You cannot prepare the cash flow statement without income statement, without the balance sheet. Okay, category of the cash flow statement information used. On your operating activities, you need more of your income statement. You need current asset section of the balance sheet, and you need current liability section of the balance sheet. This is the information you need for you to get your operating activities. Your investing activities, what do you need here? When it comes to your investing activities, you need your non-current assets section of the balance sheet, including fixed or tangible assets and financial assets in the form of fixed deposits. This is the information you need. Only the non-current asset section of your balance sheet for your investing activities. That's why you can see here, all these things that you can see here, you can only find them in your fixed asset notes or your non-current assets of your balance sheet. Then now, when it comes to the financing activities, where you're going to get the information for you to prepare the financing activities. That is the sale of shares obtained from the ordinary share capital, increase or decrease in loans. So which means now you need the equity. You need the equity of the balance sheet, which is ordinary share capital, and you need the non-current liabilities, which is the loan that you can see there. That is the information you need. So guys, when we're doing balance sheet, I don't want to see under operating activities, I see loan there. That's going to be a problem for us. Under investing activities, I don't want to see anything about shares. I don't want to see loan there as well. I don't want to see anything that goes to income statement. I don't want to see it under investing activities because they're telling you income statement will help you for operating activities. Then why are you putting it under investing activities? Then it's a problem for us. Then it is a problem. So here we have a basic format of the cash flow statement. I want you guys to go through this one. I'm not gonna go through it that much in detail. And then you go through this paragraph. I want to touch on these operating activities again in more details, right? Cash flow from operating activities. This activity deals with the cash flows from the everyday transactions. We did say that of the business. It is expected to contribute the greatest to the improvement of the cash flow of the business for the financial year concerned as it deals with everyday operations of the company. Operating activities, guys, more cash must come from operating activities. So which means now from my cash flow statement, I'm expecting to see at least 10 million here. On my operating activities, maybe I can see 7 million here. Under my investing activities, maybe I can see 3 million here. You see? But the big amount I'm expecting to see it from my operating activity, that tells you that this business is actually working. You can't be generating 3 million here, then here you're generating 50,000. There's something wrong with the business. Operating activities, they're giving you 50,000, but you have 3 million coming from the financing activities. You have 7 million coming from your investing activities. Why are you running the business like that? It tells you that you're doing nothing. Nothing you're doing. You go to work in the morning to do nothing. Then why are you running business like that? It doesn't make sense. That's not how we run the business. More cash must come from operating activities. The cash effect of operating activities are regarded as an important yardstick for measurement of adequate liquidity, inflow of cash or sign of insolvency, outflow of cash. An outflow of cash in this activity indicates the company was unable to pay off its current cash commitment from cash collected from its everyday operations. So if it happens that we have negative here, negative 50,000, for example, which means we have a cash outflow, which means the business is failing. The business is failing to use the cash it generates daily to pay creditors or to pay the expenses of the business. It is failing. It is failing, which means now you buy goods with 50,000 and then you only generate maybe 40,000. You're gonna make a loss. The business is making a loss if it's like this. Our sales are not enough to pay our expenses. Our assets, which is inventory and trade and other receivables, they are not enough to pay creditors. We can't pay our dividends. We cannot pay SARS because they will be part of what? They will be part of, remember here we're going to have what? Cash generated from operations. Cash generated from operations. That's what we're going to have as part of what? As part of our cash flow from operating activities. Then we're going to have what? Interest paid. We're going to have dividends paid. And then we're going to have tax paid. So you cannot pay interest, you cannot pay dividends, you cannot pay tax with the cash that you're generating from operations. Then it's a problem for you. It's a problem for you. You don't know how to run the business. The following aspects are covered in the cash flow from operating activities. Remember, we have cash generated or utilized from operations. You need to prepare a note here. There's a note that we need to prepare that is going to help us to get the amount that will be recorded for cash generated from operations. We need to prepare a note. There is a note that we need to prepare. And then when it comes to interest paid, check the loan statement. Usually interest is paid fully. You know, when we're doing income statement, they usually tell us the interest expense amount or we sometimes calculate it from doing the T account of what? The T account of the loan. That's where we get to understand the interest. That's how we're going to calculate it. Dividends paid, how we're going to calculate the dividends paid. We're going to check shareholders for dividends opening balance and the current year interim dividends. Those are the dividends that will be recorded as dividends paid. Remember, shareholders for dividends, we don't pay that. It becomes a liability at year end, and it will be paid at the beginning of the following year. So meaning that the dividends that will be paid during the current financial year will be a dividend, the opening balance of the shareholders for dividends plus the current year interim dividends. Those are the only dividends that will be paid. Otherwise, the final dividends for the current financial year will not be paid. Obviously, they are just being declared and then they'll be paid in the following year. They will not form part of dividends paid. Also, we can do a T account here for dividends, shareholders for dividends T account. It can help us, but usually here we just add shareholders for dividends opening balance plus current year interim dividends. Then we get the dividends paid that will be recorded in your dividends paid here in your cash flow. And then taxation paid here, you need to prepare T account for SARS income tax. That's where you will know how much tax was paid in terms of the provisional payments and all the other information. Okay, I hope you guys are still following. I hope you are still following. You will see when we're doing calculations. You will see when we're doing calculations here, you will see how we're going to be getting these amounts. NB, this is very important. Please note that cash generated from operations can also be referred to as a reconciliation between the net profit before tax and the cash generated from operations. There is a note that we're going to prepare. That note helps us in terms of, I'll show you that note. We call it a reconciliation between the net profit before tax and the cash generated from operations. It helps us to get this amount because the cash generated from operations, it comes from a note that starts with the net profit before tax. It starts with the net profit before tax. Net profit before tax. And then what happens here? We have adjustment for, we need to adjust depreciation, adjust interest expense here and all other non-cash items. Then we have changes in working capital. We're going to have increase or decrease in inventory, increase or decrease in receivables, increase or decrease in payables. Then we get it. I'll show it to you guys when we work on it. For now, let's not focus on it more. Cash flow from investing activities. Investing activities deal with the changes that occur in the non-current asset section of the balance sheet. This includes the following: purchase of fixed assets. This is an outflow of cash. Proceeds from sale of fixed assets. This is an inflow of cash. Investment matured, inflow, or placed, that will be an outflow. We spoke about this. And then the changes in the fixed assets are found in the fixed asset table that is prepared as notes to the balance sheet. Here I'm talking about the fixed asset notes. That is the only notes that is going to help us to deal with the changes in the fixed asset. Cash flow from financing activities, what they're saying here, this activity includes additional cash that the company collected through the sale of additional shares, you see, and increase in the loans, which means we're borrowing more money. We're selling shares or borrowing money. That's how we generate cash. These are cash inflows. Cash can also be utilized for the repurchase of shares, which means we're buying back shares, and the repayment of the loans. These are the things that I've already drafted here. As you guys can see, we're already having them here. So this is our financing activity. The changes in the share capital and the loans will be shown as follows in the cash flow statement. Cash flow from financing activities, we have proceeds from shares issued, cash paid for the share buyback, proceeds from long-term loan, repayment of long-term loan. These are the things that I've already spoken about here. So for me, guys, this is the information I wanted to give you today. This is a very important information that we needed to talk about. How are you feeling about this one, Smanga?
Yeah, it feels new. Yeah, I just need to get used to it.
Yeah, that's very important. I know it's new for you. That's why I decided to start with theory so that you can also understand. Very important when you do something, you must know what you're doing, why are you doing it. Then it will make sense for you when we're doing questions. Otherwise, by the time your teacher touches on this, you will already having an idea of what is happening here. You see, that's the most important part for me, is to get a background information, or before you even going straight to the question paper. That's dangerous. You can't just do question papers when you're not understanding the concept. You need to understand the concepts first, then you practice. Everything is theoretical. Even mathematics, you start with theory, then you do the numbers. You can't just go and do the numbers without understanding. Kinelwe, how are you feeling on your side?
I'm just remembering some concepts I forgot.
Okay. We had forgotten something, no?
Yeah.
Okay, but now you remember them, everything. Okay, guys, we see what I will do. I will email this to you. I'll send this to your emails. Please print this thing, because I'll ask you questions on this thing. When we're starting to do the question papers, some of the things, answers will be here, right? Just that we will like putting them into numbers now, but everything that we will be doing will be here. So please be friend with this document. I'll email it to you, and then I'll see you on Friday.